There is a number whispered in certain rooms. Not printed in headlines. Not spoken aloud. $21 trillion. Not owned. Not traded. Not directed. This is the scale of BlackRock's Aladdin. A machine that does not buy or sell. It tells others how risky reality is allowed to be. Aladdin is not a trading algorithm. It is a nervous system for global finance. It models interest rates before central banks announce them. It simulates wars before the first shot. It stress tests pension funds, sovereign debt, insurance markets, derivatives. All at once. This is not a prediction. This is obedience. When trillions consult the same oracle, markets stop being democratic. They become hierarchical, cold, efficient, inhuman. Aladdin does not care who wins. It cares only that risk is priced correctly. And when risk is priced correctly, human judgment becomes optional. The human trader was once a hunter. Now, prey. Not because he is unintelligent, but because he is slow. And worse, he feels. Fear arrives before logic. Hope lingers past evidence. Pride refuses to exit losing positions. Aladdin has no such weaknesses. It does not panic. It does not hesitate. It does not believe narratives. It sees only probabilities. And removes inefficiencies without remorse. Retail traders think they compete with hedge funds. They don't. They compete with invisible infrastructure. Systems that ingest satellite imagery of ports, credit card flows, shipping delays, weather anomalies, social sentiment before language stabilizes. The market moves before the story forms. By the time you click buy, the decision is already priced in. Emotion was once an edge. Now it is friction. Every system has a pressure point. For ours, it is 2026. High sovereign debt, aging populations, persistent inflation, AI acceleration faster than regulation. This is not prophecy, it is arithmetic. In uncertain environments, capital seeks one thing above all else: stability of decision-making. Humans falter under pressure, algorithms thrive in it. As volatility increases, Aladdin becomes more valuable, not less. Because it does not panic. It rebalances. As wealth migrates upward, AI becomes the gatekeeper. Not by conspiracy, by convenience. Institutions plug in because everyone else already has. By 2026, advantage will not belong to those who trade best. It will belong to those whose capital is already aligned with the machine's logic. Those outside will feel chaos. Those inside will call it risk management. This is how wealth transfers happen. Quietly, technically, legally. Here is the paradox. Aladdin reduces risk for individuals, but concentrates risk for the system. When everyone uses the same model, diversification becomes illusion. Consensus replaces skepticism. Speed replaces reflection. If the oracle is wrong, everyone is wrong together. Who is responsible then? The trader, the institution, the machine? No one, and therefore, everyone. Uniformity breeds fragility. The next crisis will not look like panic. It will look like perfect alignment, until it snaps. Equations will agree, portfolios will rebalance. Exits will narrow, liquidity will vanish. Silence. No villain, no lever to pull, only a system following its instructions to the end. So what remains, when trading becomes theater? Ownership, not prediction, not speed, position. You do not defeat the algorithm. You stand where it must flow. The sovereign investor does not chase price. He owns productive systems, equity, businesses, infrastructure, intellectual property. Let machines fight over microseconds. You collect cash flow. Seek asymmetry, limited downside, unbounded optionality. This is not rebellion, it is alignment at a higher level. And this is why this channel exists. Because to follow the ledger is to see the strings. If you see them, you are no longer controlled by them. Subscribe, not for comfort, but for clarity. The age of human trading is ending. The age of human ownership is just beginning.